I mean, you should probably have at least 1 to 5 risk reward ratio. If you have like a potential trade where you can set a defined stop, but you can't see at least a 5 times potential reward, you probably shouldn't take the trade. At least 1 to 5, or like around 1 to 5. Obviously, it's hard to know, beforehand, because you can never be sure if it's gonna get to your potential target. But yeah, 1 to 5 is generally a good number. If you're on a day trade, if you're up 1 or 2 times your initial risk, you should probably lock in a third or maybe even half of your shares, and then you let the rest ride and raise your stops or lower your stops if you're short. Prince at once. Yeah, if you are up 3 times your initial risk, always lock in some. If you're up on a day trade, if you're up 3 times your initial risk, you should probably locking in at least a half. The way I trade now, I go for home runs. I try to get like 20, 50 times risk reward on many of my trades. Like LK, what's my average on it? 2373? No, that's not right. Oh yeah, it's not correct. No, it shows the wrong average, because I accidentally sold like all my position up here, and then I rebought it immediately. I was gonna sell like a partial, but accidentally sold everything. But I think my initial average was like 2230 with a 22 stop. So, and I'm already up $10 on it. So I had a 30-cent stop, and I'm up $10 in like a week. So I'm already up like 30 times my initial risk on this thing, and I still have most of my shares. So swing trading is different, because you can get these enormous moves over time. But if you day trade, you per definition don't have time. Like, you have to close the position before the close. So you can't really get the same risk reward on day trades, because you don't have time. Stocks need time. Yes, there are stocks like SCS that go up 500% in a day or whatever, but those are like 1 in 10,000, right?